Good afternoon, everyone. Welcome to episode 8 of J Stay Trade. Today is April 25th, Sunday. Looks like we're about 30 minutes before weekly close on the Bitcoin candle chart. And I want to talk about today two very important topics, probably the last important topics I really need to talk about for crypto and Bitcoin learning. Today we'll talk about the Bitcoin halving, its importance and the effect on Bitcoin's price, as well as the Bitcoin 4-year cycle and how both of those work together and show a historical pattern for Bitcoin and how you can predict its price movements. And hopefully after this video, you'll be able to see why I'm so bullish on Bitcoin currently still, despite the price being at 48.6K, hovering around there. We'll discuss some videos from other crypto analysts for technical analysis. And hopefully after this video, you'll see why I'm so bullish on Bitcoin, especially for this year. Why I think it'll be the best asset overall, and cryptos will be the best asset class for performance for this year, for 2021, outperforming equities, real estate, commodities, and whatnot, and why I think cryptos will be the best performer, and especially why I'm trying to do these videos and get these out as fast as possible to educate, to inform as many people as possible to take advantage of this opportunity that is extremely time sensitive. And let's get to it. So first thing I want to highlight was this video from Cred, who's a great analyst on Twitter. And you can see all these free trading resources he has here. And I'll link this tweet and the Google document as well in the bio. So all this information, any further understanding or any questions you have for technical analysis, it should all be on this tweet. All right, let's get into it.
Bitcoin 38, 32, pre-breakout range. If it gets there, I'm buying it. There is stuff to pay attention to before that. Range high, 57.5. Range low, 45. Resultingly, midpoint, 51k. Daily time frame, 51k. Confluent resistance in this previous swing low market structure level at 52k. Whereas the market right now, below support and not yet arrived at the range support either.
So you can see how quick he is with this. He literally just draws some straight lines and you could just eyeball it and he gives analysis that fast. Really good.
What else? Generally, when you have an attempt to break from one side of the range which fails, the market trades towards the other side of the range. Accordingly, if we get a nuke into weekly support in the low to mid 40s, I'm looking to buy it, especially if it mirrors what happened at the range high. That is to say, an attempt to break below the range low, which then gets reclaimed. I think that's a brain dead long into the range midpoint, and then perhaps the range high as well. The other bullish setup, which is slightly more tentative, is if this market structure level and range midpoint gets reclaimed, so 52k plus, there may be a long there from A to B towards the range high. Generally speaking, consolidation, one side has failed, nearest pivot 52k. Bullish setups, I prefer them at support, so nukes into 45k or nukes which go past it and then reclaim it, I think are good to go. If the market really looks like shit, 38 to 32k, bid and pray. Thanks for watching.
Boom. So you see how easy that was? So he talked about what, 58k? He talked about 45k. He talked about 38k and 32k. So let's just look at it if we see those same levels by just doing our own analysis. So like everything, no matter I say it, the president says it, whoever says it, your favorite analyst says it, don't just take their word for it. Always do your own research. This is your hard-earned money. This is your decision at the end of the day. So don't try to blame me, blame anyone else. None of this is financial advice. It's just for educational purposes only. And just do your own research to make the most informed decision for yourself. All right, so let's look. We're looking at the Bitcoin weekly chart, right? So what do you talk about? Like 58K? So okay, I kind of see 58K. You can see where the cursor is on that straight line, around 58, 59K right here. So resistance, let's say even it's above 60K. All right? And then he said 52K, right? Where is he getting 52K? So basically around here where the candles are touching. So right here, the top of this body candle in March, bottom right here, you can see it wicked around here and wicked here again. So you can see where he got that 52K from. And you can see it's right touching the 9-day EMA as well on the weekly. Why I like to use these. And then what's his next level? He said about 45K. Oh, where is 45K at? Right here, candle wick, candle body again. And this candle basically almost wicked towards 45K for this week, but it's at 47K. You could see that he's not BSing. These are legitimate levels. And then what is the next level? He said 38K. Oh, where is that? Clearly, you can see that the next support or previous resistance from January all the way to February was right at 38K. Look at this straight line right here. Top of the candle here, top of the candle, bottom of the candle right here. Clear resistance right there. And then where's he getting the 32K that he talked about? Right here, the bottom, the top of this previous candle, that was the previous high from December. Bottom of the candle here, bottom of the candle body, bottom of the candle body, and it touched right here in February before it moved up as well. Let's turn on our charts, and you can see we already had these resistance levels drawn out, and you can see Bitcoin dropped 28% to the bottom at like 47K, and nothing different in the historical um, price movements of Bitcoin. Drops during this bull run, which started in October, as we previously talked about, have been 18%, 30%, 26%, 28%. This is on the higher end of the range, but nothing out of the normal. And you can see how easily it could be to be faked out on this. So, okay, we broke out strong on this candle right here, right? April 13th. We were above the yellow 20-day average volume, but look how strong this volume was. We were above it, but it was weak compared to the previous run-ups. So previously we talked about we want strong volume, strong breakout candle above a previous resistance, and then we want retests of that resistance and continued up, right? But look, we retested it right here on April 16th, but then we closed below that. And then I was hoping maybe we could retest this green trend line right here, the top of the triangle for previous resistance, and then bounce up. But no, what did we do? We broke through it. So that's why you got to play everything level by level, no bias. I mean, you can have your own bias, but be ready to have that invalidated and just be fluid with the market and take what the market gives you. And then it broke through it, and then we've been going lower ever since. But look at it compared. So we see this volume right here on the breakout, right? This green candle. But look at it compared to the volume on the previous breakouts. So significantly higher during December right here on this volume, and even on this breakout right here in January. Strong volume, a lot higher than the tops of all these other candles, and then continued move up. So it's looking like it's close to where Bitcoin, if not, if you haven't bought, it's a good buy here. Just keep averaging in, and you'll see why for the rest of this video for the 4-year cycle that we'll talk about. All right, so let's get to it. The Bitcoin halving. So this article was in February 2021. So what is a Bitcoin halving, first of all? The most recent halving occurred on May 11, 2020. And this article discusses how Bitcoin operates. So it's a collection of nodes that has a complete history of the transactions on Bitcoin's network. And each node is responsible for approving or rejecting a transaction on Bitcoin's network. And to do that, the node conducts a series of checks to ensure that the transaction is valid. And then these include that they have the correct validation parameters and whatnot. And a transaction occurs only after all the operating parties in Bitcoin's network approve the block. blah, blah, blah. And then, so the more computers or nodes there are, the greater the stability and security of the network. So Bitcoin currently has over 10,000 nodes, computers running throughout the world verifying each of these transactions. So you could see that it is becoming more secure and stable. And the Bitcoin halving event is a reward for the Bitcoin miners. So whenever a block is mined, the miners get a reward of Bitcoin. But there's a Bitcoin halving event that occurs every 4 years. This is built into Bitcoin's code that will happen until the end of time. I believe the last Bitcoin halving event is in 2140. So we have about, what is that, 130 years left until the last Bitcoin is mined. And then this is why they consider Bitcoin a deflationary asset and compare that to the dollar, which is inflationary. Inflation is normally estimated to be about 2 to 3% every year. But this past year, with the pandemic, inflation is significantly a lot higher. So the halving cuts Bitcoin's inflation rate and the rate at which new Bitcoins enter circulation. And both previous halvings have correlated with intense boom and bust cycles that have ended with higher prices. Higher prices. This is a key factor into why Bitcoin's price increases, the Bitcoin halving, higher to the last halving event. And the last halving occurred on May 11th, 2020, resulting in a reward block of 6.25 Bitcoin. All right, so I'll just skip some of the others. So after every 210,000 blocks are mined every 4 years, the block reward is cut in half, the reward that's given to miners. And this is Bitcoin's way of using a synthetic form of inflation that has every 4 years until all the Bitcoin is released. And exactly, so right here, the system will continue halving until 2140. At that point, miners will be rewarded for fees for processing the transaction that the network user. So if you send a Bitcoin across the network, it charges a fee for Bitcoin. And then these fees will ensure that the miners have the incentive to keep mining and maintain the network. And the halving is significant because it marks another drop in Bitcoin's dwindling finite supply. So one of the main factors why Bitcoin is so important and why people see it as a real asset is because of the finite supply. The total maximum supply of Bitcoin is 21 million, but at the time of writing this article back in February 2021, there are about 18.4 million Bitcoins already out in the world. But there's only about 2.6 million left to be released via mining. And I've seen it previously highlighted that there's about 3 to 4 million Bitcoin that are already lost. So really, this supply and circulation is only about 14 million circulating for Bitcoin. And there's some other charts that you can see about the amount of Bitcoin that has been dormant for a year, 5 years, whatnot, that has never been moved. So people are just could be holding this Bitcoin forever, or they just lost the the key or the wallet for it. So in 2009, when Bitcoin first was invented, the reward for each block was 50. So it got cut in half in 2013 to 25, and then 12.5 back in 2016, and in 2020, in May, it got cut down to 6.25. So in 2024, this will get cut down to 3.125 again. So to put this in context, imagine if the amount of gold mined out of the earth was cut in half every 4 years. And if gold's value is based on scarcity, then a halving of gold, since there's less supply and possibly increased demand, it would theoretically drive up this price. So and you could see right here Bitcoin's price after each halving. So right here was the first halving. It was less than 16 bucks. It went to about, I believe this was like $1,200. Then the halving here around $600. it went to 20K. And the halving here in May 2020, right? What did we say? Okay, May 11, 2020. Let's look at the price in May 2020. Turn off these drawings. Okay, May 2020 is around, what is that, $9,000. And then what are we at now? 49K. This is why worrying about the price movements for Bitcoin day to day, intraday, um, of course, could be a big factor, but always look at the longer term, broader picture. All right, and the halving implications, these halvings reduce the rate at which new coins are created and thus lowering the available supply. This can cause implications. With low supply like gold can have higher demand and thus push the prices higher. So in the past, these Bitcoin halvings have correlated with massive gains. So the first halving, which occurred in November 2012, all right here, Bitcoin's price was $12. It went to about 1,150. The second halving, Bitcoin was about 650, went to 20K. And then with 20K, it bottomed to 3,200 back in December 2018. And then the halving, like we talked about, so it was at 3,200, then it went to like 9K. All right, so Bitcoin is extremely volatile, but this is a key factor that you can help time your buy-ins into the market and to see how history may repeat itself. History doesn't repeat, but it may rhyme, like they say, and how to analyze Bitcoin's price targets. All right, so the theory of the halving and the chain reaction is basically this. The reward is half, so you have half the inflation, you have lower supply, thus you have higher demand due to the lower supply and then higher price, and it's a reflective cycle. Miners still get their incentives, and the value of Bitcoin is increased. And in the event that a halving does not increase demand and price, then miners would have no incentive for continued mining, and they wouldn't be paid enough with Bitcoin. And this process has been proven successful twice, so we're at the third go at it right now. And so far, the results of these halvings has been a ballooning in price followed by a large drop. So the large drop we'll talk about in the Bitcoin 4-year cycles as well. And the crashes that have followed have still maintained prices higher than it was previously. So back in the 2017-2018 bubble, we saw it go from around 20,000 to 3,200, but the price before the previous halving 4 years before that was only $650. All right, so it's still like 4 times to the next halving. So you could see maybe you could theoretically put that for the next halving in 2024, it will be 3 times or 4 times the 9K that we saw here, right? Back in May 2020. All right, and while this system has worked so far, the halving is typically surrounded by immense speculation, hype, and volatility, and it is unpredictable as to how the market will react to these events. And the next one is expected in spring of 2024. So let's look at these. So this right here highlights the price of Bitcoin from its halving. So Bitcoin first started January 2009, 0, and the high was $29. And then the next halving was around November 2012, and you can see the low $12, and then the high hit was about 1,150, like we talked about. So the low here, July 2016, 500 something, high 20K basically. You can see it wicked up here. July 2020 or May 2020 was about 9K, and then who knows what the high will be. Look what they're projecting it here, 3 to 400K. Who knows where Bitcoin will be? That's why you got to get in now. So I'm doing these videos, all right? Get in if you haven't. Not financial advice. All right, here's the last analysis for Bitcoin halving and its correlation to price. So 50 Bitcoin got halved to 25 to 12.5. We're currently at the 6.25 like we talked about from May 2020. And this is the stock to flow model, and historically Bitcoin follows this trajectory. So you can see there, this is why everybody says the 100K target for Bitcoin. And if you ever want to sell, that's another thing we can discuss later about never really selling your Bitcoin. You'd want to see it when price is above this range, this like highlighted area. When it deviates above that, that is historically a good time to sell. All right, so we got the Bitcoin halving down. Let's talk about the Bitcoin 4-year cycle. So this is from Rec Capital. He has an article called the Bitcoin 4-year cycle, and he discusses his targets for how much Bitcoin could rally in 2021. So there's historically been a 4-year cycle for Bitcoin, right? So in year one, these are yearly candles, so 12 months. On candle one, it's always the historic boom rally. So this right here, this candle was in 2013. This candle was 2013. 2014, we saw a sell-off. Candle 3, which is 2015, we saw recovery. And then candle 4, 2016, we always see historically a close of candle 4 above the previous resistance of candle 1 to continue on to its cycle. And this is 2017 right here, candle 2, 2018, 2019, and candle 4 is 2020. But this article was written back in October 2020. And I'll show you what this actually looks like currently now. So candle 4 normally candle 4 is also the year where the halving happens, and then it precedes the parabolic rally in Bitcoin usually the next year. So candle 4, we wanted it to historically close above 13.9K. So that was the previous yearly close back in 2017. We wanted candle 4 of 2020 to close above that. And then what did the candle in 2020 close at? We wanted it above 13.9K, right? All right, let's look at this. In December, we're at like 33K. So we blew that out of the water, almost like 3 times higher than what we were projecting it, or we wanted it to be above. All right, so there's a video that Rec Capital has on YouTube that can explain this better than me. And you can see candle 2. So this is the bottom. The bottom of this candle would be December 2018. What my thought process is, what I might do to position myself for the future is have a lot of cash here for when the next candle 2 happens. So that will be at the end of 2022. So right now we're in the new candle 1, 2021. So if this 4-year cycle repeats, you want to have as much cash as possible to buy around here at the end of 2022, beginning of 2023, if this cycle will repeat. All right, so here's Rec Capital, the author of this. He'll explain it better than me. Hope you enjoy.
Welcome to today's video update. In today's video, I'm going to be talking about the 4-year cycles for Bitcoin. So here we are on the Rec Capital website. Let's dive into the article. And of course, this article was proudly sponsored by Clio.one, one of the...
Oh, I'm actually going to link this article in the bio as well. You could literally just Google it, Rec Capital, Bitcoin 4-year cycle. You'll find it. And I'm subscribed to this guy's newsletter as well. When I subscribed, I was one of the first members. He has an excellent YouTube channel. I've talked about it over and over again. It's about like $10 a month now. It was $5 previously. Yeah.
partners here on the channel. And what we need to talk about when it comes to the 4-year cycles, Bitcoin's price cyclicity is pretty evident if we dissect it into 4-year cycles. So the past 8 years, if we just dissect each of these candles, and remember guys, these candles are 12-month candles. So this is the 12-month time frame. Each candle represents 12 months. So approximately 1 year's worth of price action. We have 2 4-year cycles going on at the moment. And if we look at each of these cycles, what does each stage, each phase of this cycle really stand for? So in this article, that's exactly something I talk about. Phase 1 being the exponential highs. It's in this phase right here where we see a lot of euphoria, a lot of optimism, overconfidence in the market, really pressing price to new all-time highs in the end of this wick before finally actually rejecting at a very key resistance. A key resistance I'm going to talk to you guys in a bit, but this is where the euphoria really takes price to new all-time highs and we actually peak before entering phase 2. So phase 1 is where all that euphoria and FOMO enters into the market. This is where retail investors really do FOMO in and prolong that cycle to unsustainable highs. And this is of course where the bubble bursts. This is the very top of the bubble, the very peak, and this is where we enter into phase 2. And phase 2 essentially is where we see a corrective period. So phase 2 is a correction where we follow through from the euphoria of the previous 12-month candle, and of course we have that correction in the psychology, because even though we had previously a lot of buy-side pressure, a lot of euphoria and FOMO, this second phase is where it corrects for all of that over-exuberance, all of that over-optimism and overconfidence in the market, and we have a correction in the market psychology, which brings things back to a stable sort of sense when it comes to price action. Investors lose their interest in Bitcoin for the time being. People get a bit more fearful towards the asset. They start to get more pessimistic. And of course, at the top of this candle, or at least near the top of this candle, is where a lot of the bottom buyers, people who bought into Bitcoin earlier on in the cycle, this is where they take their profits. And because they have a large amount of Bitcoin, given the fact that they bought that Bitcoin at a much cheaper price level earlier on in the cycle, this is where we have a lot of sell-side pressure mounting, and a lot of people do that, and then this sell-side pressure really starts an acceleratory, cascading sell-side movement towards the downside, where loads of profit takers actually start to be okay with taking profits at lower and lower and lower price levels, and this cascading really does materialize into a strong correction, which takes price to deep retracement levels. And of course, this corrective period precedes the bottoming out phase, which is phase number 3 in the cycle, phase number 3 in the 4-year cycle. So we see a volatile retracement all the way towards the bottom, which is where bargain buyers start to accumulate within a ranging period. And bargain buyers are essentially the people who start the very beginnings of a new cycle, and this is where they accumulate at the very bottom. So this bottoming out phase is essentially where we see a slowing down in the sell side momentum from the previous corrective period of phase 2, and this is where we start to see the very beginnings of accumulation and recovery after an extended correction. So a waning in the sell side momentum begins over there, and of course we see that bottoming out. So bargain buyers are very key to starting this process because they actually start the beginning of a new cycle, and it's FOMOs who come on later in the cycle, who buy in later in the cycle, that allow for continuation to occur. So even though we look at the bottoming out period being the maximum point of pessimism and fear towards Bitcoin, this is also where bargain buyers actually see the most promise and the most risk to reward, where the ratio of risk to reward is most appealing to them, because the risk is really small compared to the prospect of reward that potentially awaits them. So once the bottom is in, this is where FOMOers do dive into the asset. They start to buy at higher and higher levels, and this is what achieves, or at least allows for, a continuation in phase 4. And phase 4 is essentially the very beginning of this recovery, and if you want to think about it this way, this is essentially a U-shaped reversal from the bottom and starting into that continuation after that recovery. So phase 4 is very important for the very beginnings of that continuation, not only thanks to the bargain buyers who really started to kick off the cycle, but also to the FOMO buyers who are prolonging this continuation. And the thing to mention about phase 4 in this respect, it's very important to just note how this resistance of 740 was the resistance that actually stopped candle 1, the euphoria. It stopped that euphoria coming into the asset. This is essentially what stopped Bitcoin from going to higher and higher levels. So we registered that all-time high over here, and we rejected from this resistance of 740. We had that corrective period, then we had the bottoming out period and the recovery. And this candle number 4, phase 4, is all about continuing after that recovery and closing on the 12-month time frame above the previous resistance that stopped that euphoria and over-exuberance. So candle number 4 is a very important thing thing, a very important element in this 4-year cycle, because this is the candle that precedes further exponentiality to new all-time highs. This is essentially the role of candle 4. And if you can see, candle number 4 is essentially the time frame that we are in at the moment. We are in this phase of the 4-year cycle for Bitcoin. And of course, if you just want to really quickly go over this 4-year cycle, exponentiality after that continuation over here from the recovery, from the bottoming out period, and of course after the exponentiality of this candle over here, which it peaks at the all-time highs of 20,000, but essentially speaking it rejects at 14,300, we see a corrective period in the form of candle number 2, a very deep retracement similar to the...
I want to highlight that. So this wick right here, this wick, that little skinny thing, that was when Bitcoin went up to 20K. And at the end of 2017, December 31st, it closed at like 14.3K. So very difficult to possibly sell the exact top, as you can see here.
Psychology that we had over here, but much more stark in its retracement. Number 3 is the bottoming out period, and number 4, which essentially at this point in time, roughly speaking, resembles candle number 3 from the previous cycle. And of course, these are reversal candlesticks. These are hammer formations which precede a bottoming out period. The best way to think about a hammer in this case is that they hammer out a base with the wick and jump up into a new rally. So they're hammering out a base.
Let's look that up. Hammer formation candle. So you can see what he means by that bullish hammer pattern. Normally you will see this at bottoms. So price did shoot down here, but buyers stepped in and pushed the candle body up to a higher price, a bullish candle,
Before bouncing off into a new rally. And essentially speaking, candle number 4 right over here is looking quite good for the time being. We still have 6 months for this candle 4 to really close above a very key level, which is 14,300. And it's quite interesting to...
Oh yeah, this video was June 2020. So it's kind of crazy how you can see these play out. I'll show you the 12-month chart right after this.
To note, because many people think of 20,000 as being the psychological inflection point, which is going to really shift how people think about Bitcoin. So anything below 20,000, people think of Bitcoin as, it's been there before, nothing too really interesting. But if they think about Bitcoin above 20,000, that's where Bitcoin is going on to new highs. And this is where people suddenly experience a shift in that perspective towards Bitcoin, and where FOMO is much more likely to occur, and people are talking about Bitcoin in the mainstream. Essentially speaking, 20,000 is that psychological inflection point when it comes to the mainstream. But on a technical level, it's very interesting to note that 14,300 is actually that level that's going to cause this FOMO and interest to really ignite once again. So close.
So like he talked about 20K, right? The previous high for Bitcoin. And then what happened after that? Of course, the price rallied crazy. Everyone started talking about it. This is probably when you started getting interested yourself. You heard it in the media and whatnot. But on from a trader's point of view, you would want to look at that 14.3K, the previous high of the body close from candle 1 in 2017.
At the end of 2020, 31st of December to midnight of the 1st of January of 2021. This is where we really need to see Bitcoin close above 14,300 for this 4-year cycle to be valid and precede an exponential rally in the form of phase 1 of the new 4-year cycle, which would actually take us to new all-time highs, because every time we have a phase 1, we rally to new all-time highs when it comes to Bitcoin's price action. So as long as the preceding candle 4, phase 4, closes above a key resistance that stopped candle 1 in the very first place. And this key resistance is 14,300. So that's something really to get excited about going into the end of this year. But what I also want to talk to you guys about is the halvings and how these Bitcoin halvings situate themselves in the cycle, in the 4-year cycle. And this price positioning of the halvings is really interesting, because here's halving 1, roughly speaking, here's halving 2, and here's halving 3. And of course, these are 12-month candles, so these aren't the correct dates of the actual halvings, but these are the years of the halvings, which is essentially my point. So in the case of each halving, halving number 1, this This candle preceded an exponential rally towards new all-time highs. This Bitcoin halving number 2 was where we saw that continuation in candle 4, which preceded an exponential rally towards the upside to new all-time highs. And now Bitcoin halving number 3, we are once again at candle 4, really battling for that continuation, following this bottoming out period for Bitcoin to really rally towards 14,300 and close above it. Its historical price positioning is very curious to me because it always precedes a exponential rally in the next 12-month candle.
Like we talked about earlier, each Bitcoin halving precedes the exponential rally for candle number 1. Right here, candle 4. Candle 4 was 2020. Right now we're in candle 1 in 2021.
The Bitcoin halving precedes exponential rallies to new all-time highs. And if you guys remember my Bitcoin halving and its effect on Bitcoin's price action, you'll notice that there is a lot of confluence there. And this 12-month chart, this 4-year cycle, is a very good testament towards the historical tendencies that the Bitcoin halving has on Bitcoin's price. And that's the fact that Bitcoin's price tends to rally exponentially after the Bitcoin halving. And this 4-year cycle showcases that phenomenon, that historical tendency, in a very neat and simple way. And having said that, guys, that's about it for the article. If you'd like to check out this.
All right, so that's the halving. I'll put the link of this video in the bio as well. Look at this, man, only 1,900 views. So much great free content out there. You just gotta know where to find it. So in his article, we talked about this. This article was in October 27, 2020. He extrapolated it for what his target would be right here. So look at that with candle 4. And then he extrapolated what candle 1 would look like. So his target was around 90,000 to 100,000 or whatnot. But let's look at what actually happened. So this is what happened. This is when Bitcoin was about, let's see when this tweet was, on April 21st. So Bitcoin closed the year around, what is that, 29K. So way above this 14.3K that he talked about in the video, above that 20K psychological retail resistance where people will get interested. So close at 29K at the end of 2020, and look where we're at in candle 1. Look at candle 1, and we're right in the middle of it for this year. And they also talk about diminishing returns possibly, so from $13 to $740, from what was that, like $600 to 14K basically. And then now candle 1, well, we're coming from 29K, so it's pretty crazy. So any multiples, if you multiply it by 3, that would be 30K, I mean 90K, by 4, 120K, and so on, so on. And if we compare it to this, if we go 100K is the conservative target, you'll see that's still within this range of this gray line. But remember, we talked about any deviations above it is when you would historically sell. So who knows how high we're going to go this year, 2021. All right, hope you found something useful. Keep learning, keep immersing yourself in the space. So many free resources that I've given, that I've discussed, and I've shown, available on Twitter, on YouTube. Hope you learned something today. This is a very useful video. Refer to this whenever you have questions or you want to explain to somebody Bitcoin further. All right, have a good day. Not financial advice. Please like, comment, subscribe, and share if you found this useful. Appreciate you all. Have a good one.